participate in person today. So we
Excellent,
are,
excellent.
so I'm just waiting for social media to kick in. All right, so we're live. How are you, everybody? Good morning. Thank you for joining me in another Thursday or Ask the Lender. This session started 30 minutes later. I understand some of you were writing to me before saying, what happened? What happened? I said, we just time change. Just a
Yeah.
time change, people. It's not the end of the world.
Actually, there
Um,
is a time change this weekend, actually, I believe.
oh, good. So then you go. There you go. That was our
Spring
excuse.
forward,
That
spring
was
forward.
that that was our excuse. We went back though. We didn't go forward. We went
Hey.
back. We went back.
Yeah.
Give me one second. Move this. Can you hear me?
Yes, sir. Loud and clear.
Give me one second. Okay. So Aníbal, a lot of things has happened this week. The excitement or anxiety meter, whatever you want to call it, when it comes to mortgage and real estate, has been all over the place. It's been a very interesting week with a lot of stuff happening. But I'm gonna focus on the positive thing. So mortgage applications for this week are up 20%. So we're almost 10% year over year up. I mean that buyers are talking to loan officers like yourselves, right? To get
Yes.
for the spring season. Are you also seeing that before we get into the questions? I just thought that was a 20% increase of people applying for loans. That's big. That's a big number of people rushing to talk to loan officers. Are you seeing that where you with CMG?
Yes, 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 absolutely. Actually, myself, in this week alone, I have submitted two new loan files, and I may have another one coming in maybe this weekend. I also saw that there was a large uptick in refinances. I don't know if you saw that as well, but uh, a 37% increase in refis because we had a big movement in the 10-year, the 10-year bond, which is what really drives mortgage rates. So absolutely. And I spoke with our area manager, Ed. I don't know if some of you guys may know Ed. He's a big part of our team here
They're
at
shaking their
CMG.
heads at one in person. They know it. Everybody knows that.
Yeah. And Ed was telling me yesterday that they've been busy, that they've been very busy. We've been getting a lot of files in.
All right. And then so then what we prophesized in December was true. We said the minute rate drops, buyers are gonna rush. So don't wait until everybody rushes out. Get
Yep.
pre-approved before so you can get it under contract before and be ready before. But I guess nobody listened, right? With that.
No,
All right.
absolutely. No, yeah, we've been busy. Rates have ticked up a little bit, but we're still, really good, a good area. I think they're gonna continue to trend down. And then yeah, spring is around the corner. People taking time off, spring break. That's probably gonna be more people that are maybe gonna take that week to look at properties, maybe make offers on properties. So yeah, if you're on the fence, it's time to move.
All right. So the topic for today was a loan for everybody because South Florida is a very diverse beautiful place from ethnicity to income levels to self-employments to entrepreneurs to crypto bros, you name it. We are a very diverse area, right? So then
Yes.
everybody has a different kind of buyer. Everybody has a different kind of buyer. So to go into questions that I keep being asked, one of the questions that keeps popping up more is, Ernesto, my buyers are are not gonna go FHA because they already have a property. So this will be they're gonna move up. They're a move up buyer, which is 78% of the market right now is move up buyer. So they're a move up buyer. So if they're gonna go conventional, Aníbal, what
Mhm.
is the lowest credit score?
Typically, conventional, you know, we can go as low as 620, believe it or not, but you're gonna have to come in with a good down payment, and the rate won't be pretty, but technically conventional, I have gotten approvals with a 620 score, but a good down payment.
All right. So a 3 or 5% down payment on a conventional, it's not gonna work with a 620, I assume. But hey,
Yeah,
if you got the down payment money, if you got one, it washes the other one, right?
correct. Yeah, yeah, yeah.
Okay, and then if
But
that
but but typically, rule of thumb is 680 and above is where we'd like to be for conventional financing. 680.
okay. Another question that came up on these move-up buyers, which is to me was driving the market, um, is there a restriction on location? So I own a house in Palmetto Bay. I'm
Mhm.
moving Miami Gardens. Do I need does that do I have restrictions or no? If I'm buying a second home, you know,
Okay, so I mean, are you saying a second home as like a vacation home or like you're
no, they're
moving
gonna
to?
keep the house they have and they're gonna buy something else.
Oh, no, no. So let's say you own your primary and you want to move up or downsize and you're going to rent that home out. Now that home is going to become a rental, then you can buy a primary and there's no problem, no restrictions.
Okay, so I'm glad you clarified that. There's a lot of myth. People saying, no, if I'm
Yeah.
gonna make my primary, I need to be within a 5 mile radius. And I'm like, I never heard of that in my
No.
life.
No, no, no. No, that only applies if it's a second home. Like, so if you live in Hialeah and you want to buy a second home in I don't know, in Miami Lakes, that's probably not gonna fly. But if you live in Hialeah and you want to buy a second home or a condo on the beach, then we can do that. That makes sense.
Okay, and still one of the biggest upsides of going conventional is you get that PMI away, right?
Correct. Yeah, yeah. The PMI can be dropped as soon as you reach an 80% loan to value. So once you've home has gone up in value, you have some appreciation, and at the same time you're paying down the debt and you're at 80%, then you can now just call your loan servicer and tell them, hey, look, my name is so and so, my name's Aníbal, my property is worth X and I owe this amount. I'm at a 80% loan to value. So I like to go ahead and get rid of my PMI. And then typically what happens is there's a fee. You're gonna probably the lender servicer is gonna want to do what's called a BPO, which is called it's a broker price opinion. They're just gonna send somebody to your house. They're gonna want to check it out, make sure the value is there. And then after that, within a couple of weeks, the PMI will be gone.
Okay, all right, cool. I think that's everything I had on conventional loans. So I wanted to chat with you about the Holy Grail, FHA loans. Uh,
Okay.
the inventory in Florida is now up to a level where there's actually I just had a screenshot of it of how many homes we had that qualify for an FHA loan in the market right now because everybody says so there's nothing for sale, there's nothing for sale, and I'm like there's a ton of stuff for sale, you're just not looking, you're not looking correctly. So give me 2 seconds.
Well,
Come on.
as long as the property is lot and block, we should not have any issues with an
So
FHA financing.
From County Line Road to the entrance of the Keys, single family homes or townhomes that are lot and block, like Aniva was saying, right now there's 2,235 properties for sale. Under 620, which is the FHA limit. So
Mhm.
whoever says there's no inventory, I don't know what stats are they looking at because I think
Mhm.
2,200 homes, it's a lot of homes. I mean, my screen looks like it has chicken pox. Every red dot is a little house. I mean,
Yeah.
there's a lot of homes out there that fall into the holy grail, which is the FHA. Now, FHA, it's very lenient when it comes to credit score, but you don't want to go below one number not to get an uptick on your rates. What's your recommendation on that?
I mean, what I generally tell people, okay, look, nowadays we can all see our credit score, right? We can go to Credit Karma, you can go every major credit card provider, Chase, Bank of America, Citi, Discover, Capital One, that you can get your credit score. I would say that as long as you are seeing a score of 620 or above, then you should be good to go with an FHA. Technically, 580 is the lowest that you can go with FHA. But what I tell people is, look, those apps are not 100% accurate. They're typically a little bit I would say 20 points higher than the reality. So if you're seeing 580 on your Credit Karma app, you might be thinking, oh, okay, I'm good to go. But the reality is that when we run the credit, it's probably going to be lower than that. So I like to give a little bit of a buffer. So I say at least a 620, but technically, if you're at a 580, we can go FHA.
Right. Well, even if you're there, you guys have tools to
To
mitigate
rescore.
that and rescore or
Yes,
some credit counseling and give it a little bit of time to get it fixed.
correct. Yeah, yeah,
Uh,
and we have the ability to do a soft pull, which is great. So we can look at the credit without, having that hard inquiry come up, which is great. I utilize that all the time. I do a soft pull. I look at two of the bureaus. I look at your debt, and I can run it through my simulator, and I can say, okay, Mr. Client, this is what we need to do. We need you to pay down these accounts to this balance. And once we've done that, we can rerun the credit and rescore you.
okay, all right. So there's a myth out there, Niva, that says that FHA homes need to be 100% A-OK, otherwise appraisal will give you issues. I know you see a lot of files, you see a lot of contracts. Are you seeing issues with older homes in South Florida? Because that's a myth running around in the realtor community.
No, no, not really. I mean, look, as long as the home is insurable, that's you gotta. There's everybody, or I'm sure most of you know that we want the buyer to go and get a what's called a 4-point inspection. 4-point inspection is what? That's the roof, the plumbing, the electrical, and the air conditioning. Um, and then there's also another thing called a wind mitigation report. So as long as the home is insurable, then there should not be any issues with getting an FHA loan. One thing I will say is that if the home is very okay, so we have a lot of homes here in South Florida that are remodeled, they look beautiful, but they're maybe built in 1970, 1950, 1960. I have seen that insurance policies, even though the home has been remodeled, can tend to have a higher insurance premium because of the age. So that's just one thing I will say. So you could look at a home, it could look beautiful, completely remodeled, but if the home was built in 1960, it's a possibility that the insurance might still come in a bit high.
Okay, so same thing. Sit down with with you or anybody from your team first. Try to figure out what's what, and do it accordingly.
Yeah, yeah. I mean that's more something that I use for me when I'm running a quote for a client. They want to say how much a payment could be. I look at the age of the home. I look at the condition. I try to see if it has impact windows, the age of the roof, and I say, okay, this looks like maybe the insurance could be a little bit expensive, but as long as you fix these things, you can always get a new policy.
Okay. Um, Somebody just wrote right now asking about the 203K. And I know that we have covered this at length, and I know that you have, brought this up a few times. The 203K is not a standard. There's two different 203Ks. It depends what the house needs. But, based on South Florida values, this is a very easy loan to get done in South Florida, right?
Yeah, the 203K is like a renovation type loan. And yeah, I mean, it's just, some additional paperwork, you need to get a contractor you need to have plans, you need to have specs. You need the bank is not just gonna say, okay, here's the loan and here's the money to remodel the home and there you go. They're gonna want to see that you have actually like, again, plans, specs, things like that. And then they do like a draw type thing where they go, you remodel a portion of the home and then they check it, then they give you a portion of the money. Then you remodel another portion of the home, they check it, then they another draw. So it goes piece by piece, así, parte por parte.
Right. So for the average home issuance of Florida, which is roofing, right? There's a 203K that could assist with just that, which is simpler and more cost effective?
Yeah, 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 yeah. There's two types of. There's one that's, I believe if the repairs are less than 50,000, I have to double check that. And then there's another one where it's like the more extensive major 203K where, you know, you could be doing roof and bathrooms and kitchens and things like that. And then that one is more like a more in-depth, more extensive 203K.
But I think, yeah, I think that the Express is at 35 or 50.
35.
That one, yeah, that one is if you gotta redo the roof to, you know, to get the better insurance rate, like I even mentioned, that is the easier option to go to, right?
Yeah. Yes.
Okay, all right. I think Irelis had a question. Hi, Irelis, how are you?
Give me 1 second. I don't know what happened here. Okay, so yes, I have a question. Good morning. In that kind of loan, the total amount of the loan is gonna be the amount to buy the property plus the amount for do all the construction. That is gonna be the total amount.
Yes, yes, yes. They give you they give you the purchase price plus the I believe it's the after repair value, so that, you know, so they know, okay, once this is done, this is the whole what the home will be worth, and then they give you that, and they give you the amount of purchase and the repairs.
So you have to qualify for what is gonna be the amount after, the after repair value amount.
Yes, 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 yes.
Okay.
Yeah.
And the other question, what is the time that you're going to start paying the mortgage? When you finish construction, or since the first one is, the property
Typically,
is closed?
that's a very good question. I have to double check that, but I believe that while the construction period is going on, I only make interest only payments, but I have to double check that. And then once the construction is complete, then it goes to like a fully amortizing loan, but I would have to double check that.
Okay. Yeah, because during the construction, the person is not leaving the property. So,
Yeah,
it doesn't make sense that they have to be
yeah. It might
having
be
that.
interest only payments, or it might be deferred until the project is complete.
Okay. Thank you.
But it's
Yeah.
a great way to help somebody who needs a house and needs some love and care to buy the house and needs love and care, and and finance that over at a more reasonable cost than any of
Mhm.
these white, green, or PACE programs, which are astronomically expensive.
Yeah.
So the news came out yesterday, and I think we're getting close to another time. The news came out yesterday that Colombia is now the number 2 country looking for properties in Miami. We're now the number 1 country in this. Things get more weird every time in Florida. Is Germany. Germans who do not speak English or Spanish are apparently looking like to migrate to Miami. That's gonna be interesting.
Yeah.
It's gonna be very, very interesting. But putting aside the German joke, Colombia is still number 2, and the rest of Central South America. So
Mhm.
everybody listening to you has a buyer that is a foreign national.
Mhm.
What is your recommendation for a foreign national to get a loan to buy a property in South Florida? What is the easiest route to go?
Yes, so for foreign nationals, the easiest route to go is our foreign national investor program, which is, as some of you may be familiar with, what's called a DSCR loan, which is a debt service coverage ratio. So we basically, as a foreign national, you cannot buy a primary residence because you're not, a resident or a citizen. So you have to buy as an investor. So well, we just want to make sure, typically the minimum down is 30%. Um, and then we just look at the cash flow that the property is going to generate. We look at, okay, if this property were to be rented out, how much could it be rented out for? So let's say property could be rented out for $3,500, as long as the mortgage payment with taxes, insurance, and if there's an association comes in right at 3,500 or below, then you're good to go, because basically the property pays itself. And we can even in some cases go below, even if it's even if there's a little bit of negative cash flow, we can still get it done. But general rule of thumb is you want to be right there where it's either paying itself or cash flowing positive.
Yeah. Before I go to Arelis, because she had another question. Another rumor or myth, or to me it's a lie that runs around there with other lenders, is that the DSCR loan is only available to experienced landlords. If you don't have experience as a landlord, you don't qualify for a DSCR loan.
No, that's not true. It helps. It helps, but generally, okay, if you don't have any experience, then they want you to at least own your primary, okay? And you want to have a strong credit. You know, you want to have strong credit. You may need to put a little bit more money down. I mean, we have a lot of investors that we work with. Every investor has a different guideline when it comes to DSCR. So it's just a matter of finding the right one. But generally speaking, if you don't have experience, then we can still do it. It's just we may need like a compensating factor. You know what I mean?
Okay, but it's not a requirement
It's
of
not.
the buyer to be up, because I'm like, if you're not, if you're from Germany and
Yeah,
you're
yeah,
buying
yeah.
an investment property in Miami, you don't have any investment property experience in
No,
Miami.
yeah. No, not a requirement, not a requirement.
No, okay. How's your German? Is it rusty like mine, or you're fluent?
I know how to say Prost.
Oh,
Prost.
Prost. Okay. I gotta
Cheers.
figure out how to say feed me, and where's the beer? I gotta figure
Yeah.
out those two, and I'll be fine. I think Irelis
Yeah.
had another question. Irelis?
Okay, I'm here.
Okay.
For a DSCR loan, you told that it's going to be 30% down. Based on the credit score of the person, of the company, I don't know. Bueno, you should, is evaluate the credit score. That 30% down could be less, like 20, 25, or start all the time in the 30.
I mean, for a foreign investor, for a foreign national,
Yeah,
or just in general?
in general.
In general, okay. I mean, yeah, technically, I believe the minimum for a DSCR is 25. The thing is that if you go much less than 25, then it's very difficult to be at a positive cash flow, because these programs tend to have a higher rate. You're not getting a 6.5 on a DSCR. You're gonna be getting maybe a point higher, 7.5, maybe 8. So for the math to work, your loan amount cannot be too high. So ideally, you want to be at a 25, 30% down. So that way that monthly payment is not so high that it's not being covered by the rent. You see what I'm saying?
Yeah, I understood. And the other thing is, the other question is, you have a landlord that have multiple properties, that has experienced landlord.
Yes.
The interest rate, that could affect the interest rate at the time that get it on the base interest rate because you are an experienced landlord.
Not really, honestly. I've done DSCRs for clients that have 6, 7 properties. What really helps the rate is the score, and the down payment. Yeah, they look at the score.
Okay.
Like I've done DSCR for a client that had an 800 score and he got a really good rate. Yeah, and these programs with us have no prepayment penalty, which is great. Some DSCR programs out there that you hear about, they have a prepayment penalty, which you can't pay off the loan within a year, 2 years, 3 years. Here at CMG, our DSCR programs have no prepayment penalty.
That's huge.
Yeah. And then one more thing I was gonna say. Oh, if you have a foreign national that wants to buy with a DSCR, we will need either something equivalent to a credit report, and then we may have to get that translated if it's in Spanish, or then we would need credit reference letters, which we have templates. I can provide that for you. But we need to establish a credit history, like that the client has a history of paying their accounts on time.
Okay. That was
Thank
easy.
you.
Thank you. Anyway, I know that we got almost no time, but there's just one more question. I think we did a whole presentation that, but somebody was asking me on bank statement loans.
Yes.
Can they be personal or company? That's
It can be either or.
Do you want to tell everybody what's a bank statement loan really quickly?
Yeah, absolutely. So it's a great program for self-employed people, self-employed individuals. So a lot of people here, they have a business, they make good money, but they don't, they take a lot of deductions, they write off a lot of expenses. So the IRS, what they tell the IRS that they make is a lot less than the reality. So what we can do is
Really,
we
people do that? I
yeah, hey,
cannot believe you.
nothing illegal. You're doing, there's nothing wrong with that, but then when it comes time
A
to
lot of people laughing around me right now, and a lot of realtors laughing around me right now.
no, yeah. You have a car expense, you have a computer expense, you have administrative expense. So, all those things are write-offs. So, so instead of looking at your taxes, we look at your bank statements. And so generally what we do is we look at your deposits and we're going to do a 50% expense factor. So let's say you on average deposit 20,000 a month. We're going to take 10,000 is for your expenses. 10,000 is what you have left over for you. So that's what we use to qualify you. And then, yeah, we can use business accounts or personal accounts. Some people are sole proprietors and they just deposit their money into their personal account. Other people have corporations, LLCs, and then they actually have business accounts. So either one.
Okay, so they can use either personal or company account.
Correct, yeah. And again, these types of programs, they do require, you're not going to get a 5% down on a bank statement. You're going to have to come in with a good down payment and ideally a good credit score as well. You're not going to get a bank statement deal with a 620 score. You got to be 680 plus, I would say. And, you got to be able to come in with a good down payment.
Okay, well, Anibal, thank you so very, very much for today and for enlightening us and letting everybody know that no matter what buyer you have out there right now, there's different programs. Not everybody fits in the same box. We have little different boxes, big boxes, little boxes, and we can definitely get the deals done, especially with the inventory going to where it's going. I'm putting your cell phone on the chat, so anybody that wants to get a hold of you can reach you there. Thank you so very much, and I'll see you next Tuesday.
Okay, see you guys. Have a great
Bye.
week.
See you.
Bye.